great. That's wonderful. If they're doing step out, yes, that is risky. That is risky, but if you could look at it as, I love the aggression is what I'm trying to say, because what Hugh just said, this is what dreams are made of. This is already a great asset. If you step out and you hit and you can tie that step out hole to what you already have, you just have a generational find. So, Hugh, when will those results be coming out?
Yeah, yeah. We're expecting to see something from that in the early new year. Rigs arriving into this month. So that'll be 4 rigs drilling for Revival Gold.
Love the aggression.
We're gonna have a ton of news out here.
Hugh Agro, Revival Gold. Good morning to you, my friend. How are you?
Good to be with you, Andy.
It's great to have you, and thanks for coming on again. Real quick to all my viewers and subscribers, this is not investment advice. I am an investor in Revival Gold. Revival Gold is also a new sponsor to naturalresourcestocks.net, just full disclosure. Hugh, you just came off the road and you're about to go back on the road, getting the story out of Revival Gold. You were in Colorado. How did that go for you? What was the energy there? Tell me all about it.
Yeah, I'd say it's a pretty good mood out there for investors and corporates alike. We had some 50 meetings over a 3-day period, and then of course a number of other events going on, and it was busy. And what was really unique about this year is that you could see keen interest in finding value in the sector, and I think that's a common theme here. Is because we've seen some moves in the senior cap stocks, hasn't yet come to the developers, but investors and corporates alike are looking.
Okay, so let's work that out a little bit. I've had multiple conversations actually in the past week. One of them was with our friend Jeff Phillips, and we talked about finding value in this sector. It is my opinion, and again, in my own portfolio, I am 70% invested, meaning I have a lot of stock, but yet I have some cash on the side looking for value. I do see my opinion, I do see it's a little overstretched here. What is your opinion on the market? Are we still in a value phase, or do we used to, or do you see us being a little bit overstretched?
Well, look, just a little bit of perspective first. I'm a mining engineer. I've been through 3 cycles in the gold space. And what we tend to see at the top of the market, at least in my experience, is the kind of euphoria that leads to wild bidding for companies. It leads to overstretched valuations, and it leads to overinvestment. So overinvestment in exploration, overinvestment in sustaining capital, and you'll hear announcements about projects going forward that otherwise might not go forward. I think we're seeing something quite different this time around. I don't believe we're at the top of this cycle by any means. And I'm looking at what's happening in the senior gold companies as an indicator, the intermediate gold companies. What we're seeing is divestitures of assets. We're seeing continued payment of dividends and restraints on capital investment in exploration and development. Last year we saw the resources being done well below spot prices on the metals, and again we're going to see that this year. So I don't think we're in that point of euphoria yet. In fact, I would say investors are scrambling to find opportunities, and they're looking to pay up for assets like Hemlo coming out of these senior gold companies to get it.
Yeah, I would agree with everything you said on that note. And when I say I think the market's overstretched, I'm just looking at this very short term. And for all investors, it shouldn't really make a difference to you. Again, not investment advice, but it just really depends on your time horizon. For short-term traders, sure, look for a pullback. And also, I just have paranoia, and it's just my personality. I think chalk it up to that. But I would say if this was a football game, we're still well within the first quarter. So we got 3 or 4 more. We got at least 4 more quarters to go. That would be my opinion.
Yeah,
Um,
listen, prudent to take winnings off the table, no question about that. Again, that just comes from experience in the business. Some names get ahead of themselves. One thing that does happen, again, I point to that Hemlo transaction, is you'll see assets that are not particularly good quality, or assets that might in a tougher market struggle. You'll see those move up because, again, investors looking for value, looking for opportunity, and look, I think in the senior gold company space, even in amongst the intermediates, there's still a ton of discipline out there, which is good for the sector. Think about that, right? It's a supply and demand fundamental on the metal. You got a lot of supply and demand coming out of investors, central banks in the gold space, but you get over 120 million ounces a year coming from producers. And if those producers aren't investing and putting new production on the go, that means there's a constraint to supply, and that's good ultimate for the long-term gold price and for developers who are further along with good projects in good locations.
Okay, so you mentioned three things that I want to pull out. You were talked about the seniors here, that there's still a lot of value, but also correct me if I'm wrong. Typically in these cycles, the money goes first to the seniors, then it trickles down or flows down sooner or later to the developers and then to the explorers. So correct me on that and work that out for a little bit. And then also you talked about finding value. When I get emails all the time, I get texts all the time, Andy, how do I find value? And what is a good project? So give me your thoughts on that, but answer the first question first, if you don't mind.
Yeah, you bet. The reason I can say that the gold stocks are trading at still at good value is that they're producing about 5 to 7% free cash flow yield, trading at about 0.8 times NAV. These are numbers out of Scotia Capital, one of the more rigorous banks out there. So those relative to historic norms, even at a top of a cycle, are pretty darn good. And as you move down the food chain here, you've got developers trading at half that multiple, so about 0.4 times NAV, and as low as 0.2 times NAV. So price to underlying net asset value. Now you can debate what kind of gold price to use in those NAVs. Some of those projects are going to be coming on sooner and others later. But generally speaking, I'd say the landscape looks like that, 8.8 to 1 times NAV for the cap producers. And then moving down from that, you get into the developers at 0.2, 0.4 times NAV. So when we think about going to value in the space, we think about going to the developers because there's value and leverage, more gold exposure per share held. And that's important. If you think the gold price is going up, if you think that senior gold producers are going to need to replace their inventory of projects, you want to go into the developers. It's a little more risky. It's a little more longer term kind of investment horizon one has to have. But in a market like this, when you've got a gold price that's rock solid and investors scrambling to get positioned, I think the outlook is pretty good in that space, and it's going to be good for quite some time, I believe.
Yeah, I would agree with you. Let's with everything you said. Another question that I get from viewers, listeners, and just people that I meet is, what is a great process in finding value here, as far as just meeting people? What's the first thing? And you already talked about this in the previous question, but what's the first step that they should do? Should they look at what do they have in the ground? Should they look at jurisdiction? Should they look at management, the team? Yeah, just give me just some tips here for what the average retail investor should look for.
All of those things matter. And I think, I think it's really, really important if you're not willing to do the homework yourself to get some good advice, some good financial advice from somebody who understands the market and what's happening in the stocks specifically. So get some good advice. If you're not willing to put the work in yourself, get some good advice. And look, there's some great people out there. You and I both love Rick Rule, not a financial advisor, but certainly somebody who's invested successfully in the space and made some great calls. And if you follow people like Rick and kind of get to understand the landscape, that's very helpful, because there's so many things that go into making a successful developer and producer, and capital structures, just one of them. Underlying asset, values, just another. People is so important. Following the successful track records and making sure you stick with winners is huge, because there are always things that are going to come up that get in the way of the path of a management team, and that team's going to have to get around those challenges and make success out of something that looks like it's going to go the other way around. So all of these things matter. I'd say follow the strong money, the strong hands, and invest in a diversified manner across the spectrum. There's the great thing about the gold space is we've got royalty companies, we've got senior gold producers, and we've got developers. And there's a plethora of them, so you can get some good diversification across different geographies, different companies, different strategies, and a basket of companies is always a good way to go. Look, I think we've got a great story in Revival Gold. I know we're going to get to it, but I wouldn't say to you, put all your money on one horse. There's things that can happen that can slow things down, speed things up at times, but you want to be diversified.
Yeah, great answer. So let me just talk to all my viewers and listeners here. Again, this is not investment advice, and Revival Gold is a sponsor of naturalresourcestocks.net, and I am an investor. These are this is how I start my evaluation. I look where they are at in the Lassonde curve. I like all throughout the Lassonde curve. I like explorers really early. Again, that's very high risk. I like developers that I feel offer deep value. And that's what I would consider Revival Gold. I love those stories and those companies. And then I like people going into production, and I like producers, all at this gold prices. So Hugh, you checked all those boxes. Another box that I was really impressed with, you guys have a lot of cash in the bank. And to all my viewers and listeners, think of this as biotech, if you would, or a technology sector, if you would. Those companies go out of business all the time. That is the junior natural resource space. That being said, I want to see them check a lot of boxes, but one of the biggest boxes I want to see is how much cash do they have, and how accessible they are to the financial markets. And Revival Gold, that's what hit it out to the park for me. And then I just loved the jurisdiction and the assets in the ground. And then I loved the experience of the team. But these are my words. Hugh, I want you to tell all of our viewers and investors, in evaluating Revival Gold, where to start with, and tell me about the Revival Gold story.
Sure. So first and foremost, start with the team. This is a team that's done it before. I could go through each of the bios on the team, but I myself, a mining engineer by training, was part of taking Kinross from 1.7 billion to 17 billion when I retired, and then
That's a 10x.
That was a big move. And
well done.
Good gold price environment, but some great teamwork on the part of the folks I was working with, and part of building a great franchise there. I retired for a while, came back to do Revival Gold. I came back to do it with some guys who've likewise been successful, people like Wayne Hubert, who've taken Andean Resources from 100 million market cap to its sale to Goldcorp for $3 billion in the last cycle. Guys like Larry Radford.
That's a 30 times.
Yeah,
go ahead.
Who have not only built operations, but turned them around, made success of them in the United States, in Australia, in South America, and a wonderful mining engineer based out of Reno, Nevada. So these are the kinds of people that we've built this company with. Our VP Engineering Development, John Meyer, developed plans for Stibnite, which is now under development by Paulson and Company. Fruta del Norte, which of course is underpinning that huge success with Lundin Gold today. So these are the kind of people we have on the team, and you start with that. I think the next thing is great assets in great locations, and these things don't happen overnight. It's taken us 7-8 years to put this portfolio together, and that goes back even further in terms of assembling the land positions. 2 big gold systems in the Western United States, one a Carlin type system in Utah, which is very similar to what we see in Nevada, underpinning some of the world's biggest and most valuable mines. and then an orogenic gold system in Idaho with some 3.5 miles of mineralization already. And we're taking big step out holes there. Drill rigs arriving into this month for that program, about 1.5 miles from where we last saw mineralization. So this is going to be really exciting over the next 6 months, I'd say, as we move through that 10,000-foot program. So these exciting land positions, big geology, that's key. But going back to sort of the fundamentals here, ultimately we want to get to free cash flow, and that really is why we're so focused on our Mercury project in Utah. This is an asset on a brownfields location, which is to say we've got power already to site, paved roads, we've got infrastructure, office space, water access, all of these things. And a very exciting plan to start a plus or minus 100,000 ounce a year operation up with construction expected to start in about 2.5 years. Now we're underway with a big drill program there right now. 2 drill rigs turning, about 44 holes completed to date in this program. We've got another. Gosh, we're less than halfway through, so there's going to be a lot of drill results coming out from that program. 3rd rig on its way to accelerate things there, and first results expected in October. So we're marching forward with that project. It's on private land, and I think that's another key criteria we want to look to. And finally, sort of circling back to why Revival Gold. I think it's the backing. This is really key. If you're starting a new venture, whether that's biotech or in the resource space, these are no small adventures to go out on. So you want to have good backing. In our case, Dundee Corporation very successfully has created a number of mining companies in the past, and EMR Capital out of Australia. So $30 million of cash, solid backing, and these very large prospective gold systems to advance in a rising gold price environment. It just doesn't get any better than that.
It really doesn't. And again, just saying with you and getting to know you, that's really what you just checked all the boxes for me. I'll leave it at that. I would like to ask you, you said step out. I know what that is, but can you clarify that for all of our viewers and listeners and the importance of that? When you said that, and I knew that before, I think we've had previous conversations about it. That's really key in growing a resource. It's risky, and I don't mean that not to scare anybody at all, but it's really confidence that you have something much bigger than what you already have. But I don't want to put words in your mouth. Tell all of our viewers and listeners about step out drilling.
Yeah, it is risky, but no risk, no reward. And so what the trick, I think, in Revival Gold, the way we think about it is, let's do a balance of drilling that's going to advance our Mercury project in Utah towards a production scenario. But let's not forget that we don't want to get stuck on a Lassonde curve just developing an asset. We want to continue to drill. And so that's what our Beartrack-Arnett project in Idaho offers us with a project that's got 4.6 million ounces of resource already, a 3.5 mile trend of mineralization that we've hit with every drill hole. It's just begging for us to go in there and take some big step out holes. And that's what we're doing. We're moving along the strike, along the main trend of mineralization, and we're stepping out about a mile and a half there to drill in an area which our geologists think is in the same structural environment and offers the same prospectivity as what we've already drilled. Now, we may not be successful. We may find that we have to do a lot more drilling along the way, but this is the kind of things that dreams are made of. I mean, you don't get this kind of geology very often in the world, let alone in the Western United States. And I can tell you, there are a lot of eyes on this project and what we'll be doing there this fall and into the winter. So,
yeah.
So I go back to these conferences in Colorado. What we're seeing from the majors and intermediates, some of the biggest gold companies out there, the biggest gold companies, is an appetite to look for these opportunities and get aligned with companies like Revival that are putting these opportunities together. And that's a shift from, I'd say, 3 or 4 years ago. The companies are in much better shape. They've got better balance sheets. They've got investors clamoring, asking them, what are you going to do for your future growth? And the response from folks like Mark Bristow is to talk about 4 Mile. And I think that's telling, right? When we can talk about development and exploration with with a glasses half full attitude, as opposed to a glasses half empty attitude, which is where you are at the bottom of the cycle when dollars are scarce and companies aren't making any money. The reverse is the case today.
Yeah, so very well said. If I can just recap that for all all my viewers, again, please don't take this as advice. Do your own due diligence. Here's the deal. This is what I look at when a company that has a asset that's already in the ground that has significant value. That's something I know. Great. That's wonderful. If they're doing step out, yes, that is risky. That is risky, but if you could look at it as I love the aggression is what I'm trying to say because what Hugh just said, this is what dreams are made of. This is already a great asset. If you step out and you hit and you can tie that step out hole to what you already have, you just have a generational find. So Hugh, when will those results be coming out?
Yeah. We're expecting to see something from that in the early new year. Rigs arriving into this month. So that'll be 4 rigs drilling for Revival Gold.
Love the aggression.
We're going to have a ton of news out here. The assay labs are slowed up a little bit here. Our initial assays from the Utah project went in beginning of August, and here we are almost at the beginning of October before we'll have anything back, and then results out in early October. But it's going to be newsy because there's a lot of drilling going on. It's exciting. Everybody on our team is thrilled. I mean, I was out there about a week ago, and it's great seeing the smiles on everybody's face. I mean,
this is what you guys live for.
Yeah. No, it's really fun, and you can see in the core the kind of rock units we want to be going through. Of course, we don't know how that material is going to perform until we see assay results and we do met work and so on. But sure feels good. We're excited about what we're getting to here with the program at Mercury, the program at Beartrack-Arnett to start shortly. And look, I want to step back to value again because it is important. We think about risk in this space, right? When you and I first got talking, stock was trading at about 49 cents, 50 cents Canadian a share. And here we are today, it's 65 cents, so up 30% from when we were first talking. But again, I go back to the underlying value here. 6 million ounces in the domestic United States, trading at 0.2 times NAV. That's 20 cents on the underlying dollar value of NAV, gold NAV in the company, net asset value. And that's just for 2.5 million ounces of the 6 million ounces we have in resource. So we got a ton of potential to bring material in to engineering studies as we progress. We've got all that exploration potential that you and I have been talking about, and from a relatively confined capital structure, 272 million shares outstanding. That's 22 ounces of gold exposure for every 1,000 shares held. Now, look, I would, as you've done, refer everybody to cautionary language on our website at www.revival-gold.com and to get proper investment advice. But listen, from where I stand, it's a screaming buy opportunity. In fact, I've stepped up myself for another 200,000 shares since you and I last spoke, and I'm very long on this story with a lot of enthusiasm for where we're going.
Yeah, fantastic. Hugh, how can people trade you? What exchanges are you traded on, and what is your ticker symbols? And I'll also put all of this in the show notes.
Yeah, RVG on the TSX Venture Exchange and RVLGF on the OTC Markets QX.
Excellent. Hugh, love to have you on again in probably early October as the news comes out. If that's okay
Yeah,
with you, you can give an update to all of our viewers and listeners. Again, I am an investor. I do have skin in this game and I do have bias, but do your own homework. Thank you so much, Hugh, and looking forward to seeing you again in October.
you bet, Andy.